Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated, if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have John Casmon. John is a real estate entrepreneur who has partnered with busy professionals to invest in over $100 million worth of apartments. He hosts the Multifamily Insights podcast, in which I was a guest on recently, and is a former corporate marketing executive. Welcome to the show, John. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, absolutely. Hey, Gary, thank you for having me here. As you mentioned, I used to be in corporate America. I did marketing and advertising for 15 years, but today I am a full-time real estate entrepreneur, multifamily syndicator. And essentially what we do, very similar to your business, we work with busy professionals to help them invest in real estate without the headaches or hassles of being a landlord or a flipper themselves. So I started off, really with my corporate job, and like many listeners, one of my biggest fears was what would happen if I lost that job? And sure enough, I was working at GM back during the last economic downturn, and we ended up going through bankruptcy. Now, I was fortunate enough to not lose my job, but it did really give me a sense of urgency to have a plan B. Started to learn about real estate, ultimately moved to Chicago, and I invested in my first 2-unit building. So got a 2-flat, lived in one unit, rented out the other. Fast forward a couple of years, I'm slowly building up this portfolio, got a 3-unit building. I put down a 6-figure payment on a 8-unit building, my first commercial asset. And then the job I'm working at also goes through bankruptcy. So you can imagine kind of the fear, frustration that I started to, really go through. And it made me really start to think about my strategy, my approach, and what I was doing. And I had to come up with a better solution. So that ultimately led me into apartment syndication and working with other investors, which again, we can detail a little bit more in a second.
Yeah, a very interesting story. I think a lot of people are so fearful of making that leap. I think only a very small percentage actually take that leap from something they really want to do, being an entrepreneur versus working for someone else. How did you get past those? I know you said there was that urgency, but was there anything that you had to mentally yourself get past, and how did you get through that to get to the other side?
Well, the big thing for me was, especially when you're talking about, okay, hey, how do you scale? Well, if you've got a ton of money, you can just buy bigger properties, right? Or buy more of the same properties, which is what people do. In my case, I did not have a ton of money, and I didn't know people with a ton of money. I mean, I'm sure I knew people who had money, but the reality is I didn't think they'd want to invest with me. Who was I? What had I done, right? Why would they invest with me? And on top of that, I didn't know what I didn't know. So even the deals that I was doing, the ones where I was having success, I really couldn't tell you how or what I was doing that drove that success. So that was kind of my fear, right? It was, I didn't think people would want to invest with me. I didn't know how to overcome those issues. And ultimately, I started to surround myself with more people because I was always curious. So even though I didn't know or believe that people would want to invest with me, I was always curious and I would talk to people. And I remember going to a meetup, and there was a woman who ran this meetup. She was there every week because it was her meetup, or every month. I was there every month because I wanted to learn. And we just got to know each other well. And she slowly started to grow her portfolio from 3 units to 9 units to 90 units. And when she got to 90 units, I mean, literally the last time I talked to her, she had 9. She got to 90 units. I said, wait a minute, what? So I invited her to go to breakfast. She accepted my offer. And I asked her, I said, how in the world did you go from 9 to 90 units? And she explained to me OPM, other people's money. And it's not necessarily this negative thing where you're borrowing money or taking someone else's money. It's really about partnership. It's about helping people who want the same benefits of investing, but they don't have the time and energy to learn or do it themselves. So she was local. She had the time to do it. She had the energy to do it. They had the money. They partnered up to do these deals. That was the first time it became real to me. And I think for so many listeners, if you find yourself interested in taking that leap or living a bigger life or having a greater purpose, but there's something holding you back, figure out what that real thing is. If it's a fear that you're going to fail, if it's a lack of knowledge, if it's a lack of a network or capability, just start addressing that directly. Start meeting people, start educating yourself, listen to podcasts like this, read books, get into communities like yours. When you start doing that, the opportunities start to come because by surrounding yourself with people who are in the space, you elevate your thinking and your possibilities. And for me, it really started with attending her meetup. Something as simple as going to a meetup consistently. Now, here's the key. The key is consistency. Because I went every month, it became real. And I got my little fix every single month. And I could see people growing. And I saw her go from 3 to 9 to 90. And that made it very possible to me. If I just showed up and she had 90, I'm like, oh, that's good for her. But I wouldn't have seen the pathway. But I saw that, and that made it really real for me. So that's why I tell people, connect as much as you can, get into a community with people that can help you scale, hire a mentor or a coach, but you've got to find yourself that environment so that your fears really get neutralized. And you're really surrounding yourself with people who can help you understand how to do it. And you're not asking yourself if you can do it. It's just really a matter of here's how you do it. Now you just got to run the play.
That was a ton of golden nuggets. For those listening out there, I would go rewind and listen to that because that was awesome. I had a lot of the same fears, and until I surrounded myself like you with other like-minded individuals, it gave me energy. I was learning from them. It created a vision for me of something I could attain that was out there, and I without seeing it from other people, there was no vision to get to. And whether you're just starting out or maybe you've been doing this, for a bit, and you're doing maybe the 80 units, and now you're hanging around with people that are doing 200 units. Like, what is that path for that next level? And it it doesn't matter. You don't have to go for a 200 unit or a 400 unit or whatever it is, but to get to that next level, what will surround yourself with those individuals, like you said. So beneficial.
Yeah. I mean, like you said, when you are surrounded by these people, it just forces you to stretch what's possible. I'll give you a really clear example. I ended up, from my conversation with my friend, her name is Bree. She's based in Chicago. She had her meetup, and we ended up doing some other things together as far as running events. But from that, the one thing she told me was, hey, the only way I know people who can really scale is they either take the money they have and they flip a house so they have more money to invest in long-term rentals, or they have to work with other people, right? So that just made a lot of sense to me because eventually you're always going to run out of your own money, no matter how much money you have. So that made sense to me. The next, I don't know, maybe a month later, I met Joe Fearless, who ended up becoming my mentor. And at that time, Joe had only done really one big deal. But that was great for me because I could see the pathway. He had raised $1 million for that first deal. I didn't want to raise $1 million. I just wanted to raise like 100,000. So I'm like, all right, well, he can 10x what I'll do. If I could do 1/10 of it, I'm great, right? I literally just wanted to partner. I spent $100 and maybe $30,000 on that down payment for that 8 unit. And I was like, all right, if I could just find somebody to bring half of this, or if I could just put, 30, 40, and then I could do 3 or 4 of these, now I could really scale. That was my whole vision. That was my vision. And then this dude went out and started doing 200 and 300 unit deals And he did like 3 or 4 in 1 year. And I'm like, wait a minute, what? I had never even heard of apartment syndication. And I'm watching him scale this portfolio. And it made me step back and say, maybe I'm doing this wrong. Maybe I'm not thinking big enough. I kid you not. I did that 8-unit deal I mentioned. The very next deal I did was 192 units. Now, that wasn't me all by myself, to be clear. I had partners. I was not the lead operator. I was a general partner, but that's actually brilliant because I didn't have to be all knowing. I didn't have to be the expert. I didn't have to do everything myself. I could lean on the expertise of other people. I could grow. I could get more comfortable. And then eventually I could break off and do my own deals, which is exactly what happened. So I love that approach of surrounding yourself with people that can force you to stretch your thinking, to stretch what's possible. And then you put yourself in situations where you can really thrive and grow. Because there's no way in the world you could have told me when I bought that 8-unit building that my next deal will be 192 units. I would have laughed hysterically in your face.
Absolutely. But you did it. You pulled it off because you thought bigger and you faced your fears, and that's awesome. So team is so important. Like you said, you couldn't have done it without the team. So talk about building a team, or, and what are the things that you're looking for? You're some, maybe if you have these strengths, then you're looking for maybe some of the weaknesses that you may have are not as strong yet. So talk about that.
Yeah, so I think very often we talk about building teams, we get into traits and skill sets, and those are very important. But before we even get into that, I want to talk about character and values. Who are you as a person? At your core, who are you? Do you have similar values? Are you a high character individual? Because these are real partnerships, right? When you're building your team, like they're an extension of you. They're going to make decisions. You want to be partnering with people or working with people who are going to have those same, values, those same core beliefs. And it can get hard because you don't know right away. Everyone puts on their best face. When you first talk to somebody, everybody's nice. Everybody wants to partner. Everybody wants to do things together, right? Everybody wants to collaborate. But what happens when things get rough? What happens when it's a tough situation? That's when you really get to see who people are. And unfortunately, you don't get to put people in those situations up front early enough to truly get a gauge of people's characters and values. But I'm looking for little indications, right? I'm looking for how you respond, how communicative you are. Do you take accountability for things that you're supposed to do? Are you a responsible person? Who are the people around you? Do you have family, friends? Like, just how do you treat others in the service industry? All of those things give you a little bit of an indication of the kind of person you're dealing with, right? So I look for character and values first and foremost. Once we kind of get a sense of, hey, this is a good person. This is somebody we'd want to work with. We'd want to talk to. We'd want to have a beer with. I'd bring around my kids. Then we can transition to, all right, what skills do you have? For me, my background is in marketing. I've done project management. I've done investor relations. I've done big picture thinking, being in corporate America. I'm pretty good with numbers, but I don't love the numbers, right? So I don't love underwriting, but I can do it. So for me, I'm always looking at the skills where I don't love doing it, or I just know other people are way better. So underwriting is one of those areas. I'm always looking for people who love the construction side or the execution side of asset management better. I actually enjoy the asset managers, the property managers, because there it's more, hey, what's going on from a strategic standpoint? Have we tried this? What resources do you need? Let's look at this vendor. That part's different versus construction management, where I realize that's just not my background. And I'd rather lean on someone who truly understands the construction aspect a little bit better than I would. So, you break things down there. I know that's an area where I'm always looking for some assistance. I can do it, but I'm not the best at it. So I'd rather lean on somebody else who's good in that space. And then on the underwriting, same thing. So I always try to take a look at it based on the project and say, okay, what does this project really need? Out of what this project needs, here's what I can deliver. Here are the things that are missing. Who do I have in my network that I know, I like, I trust, and I know is going to bring value, that has high character, high values, and those are the people we want to work with on an opportunity.
Yep, I love it because even if you can do everything, if you want to get to scale, you're not going to be able to do it. And so being able to rely on people that have a passion for some of these other tasks, like you said, construction and whatnot. It certainly you're part of those discussions, but let them lead on those, and then you could focus on the things that you like and do really well, and it really will help you scale as well. So very, very important. Um, is there talk about one of your like biggest struggles in the business, maybe a setback or something that you have faced that you've had to overcome over the years?
Yeah, I mean, I think everybody in this business, you're going to face some setbacks. For me, it's been multiple times when I was really looking to scale and get started off with the syndication business. One of the challenges I made for myself, I told you my friend told me that, hey, to make money, you can either flip houses or raise capital. Well, I decided to try to do both. On the flipping houses side, I actually partnered with another builder. So they were running all the construction, all the building. I was really the money. Well, that went completely sideways. This builder ran into some personal issues. They really had a faulty business plan, which I didn't discover until later on in the process. And I got stuck holding the bag. Now, the easy thing is obviously to blame them and say, oh, they did X, Y, Z. But the truth is, I should have asked better questions. I should have been less eager to double my money or whatever I thought I was going to do. And I should have, looked at it and said, okay, where's the risk in this? Am I comfortable with that risk, even if it doesn't work out? And the difference for me is when I'm investing in multifamily, those deals have less risk. And what I mean by that is cash flowing assets, income producing assets. There's money coming in. So if there's enough money to cover all the bills, we're in a decent spot. Then you look at the loan. And if you have a long-term loan or you have a fixed rate loan, now you've mitigated that risk. So you can take all those variables and have a better gauge of what's happening. With my flip, at $0 coming in, I was paying like 13% interest rate, and I was capped at the value. I could only sell the house for $430,000. It didn't matter what I did to it, right? That's what the market called for. And my construction costs ended up doubling from what they were supposed to be. So I was screwed. I was screwed. I didn't have a plan B. I could rent it out, but I was still going to lose money no matter how you cut it. So that's why I say I would have been better off focusing on what I really cared about, which was multifamily, as opposed to doing that flip. So that was one big loss. But my lesson there is, even when you're a newer investor, even when you don't have the knowledge, the expertise, the track record, trust your training. You're listening to podcasts like this. You've listened to Gary. You're listening to me. You've read books. Sure, you may not have gone out there and done some of these deals, but you've listened to the people who have. And if we're telling you our philosophy, our theories, our rule of thumbs, there's a reason. We didn't just make this stuff up, right? There's a reason. And I recall getting into flipping and I'm like, well, there's a 70% rule. I know they didn't just make that up. I know a lot of people did deals to figure out this 70% rule. So when I was doing that flip project with a guy, the numbers were at around 85%. And I remember asking him, I said, well, how are you able to make a profit if the margins are so slim? And he had this theory where he's going to just do it at scale, and he really did have a nice plan because he had a lot of infrastructure set up, but he didn't factor into a couple of key things, and ultimately that didn't work out. So you got to trust your gut, trust your training. If you don't get the answers you're looking for, it's okay to wait. But that FOMO mentality, don't, like, not with investing. You don't want to have FOMO with investing. Take your time. It's okay if you miss out on the home run deal as long as you're learning. But you don't want to have that analysis paralysis, right? So if it's not a true issue, if you trust the people, you understand the deal, you understand the risk, move forward. Now, I'm not saying put your life savings into it, but I am saying move forward, especially if you can live with the downside. The truth of the matter is those flip projects that failed were actually phenomenal for me because it taught me to have more confidence in myself, to trust myself, trust my gut, trust my training. Even if I don't have the experience or the track record to justify it, or at least at that time, it gave me that confidence because I do a lot of research. I spend a lot of time talking to other investors, reading, networking. Like, there's a lot of growth and knowledge that's there, but sometimes we don't give ourselves credit for the amount of work we put in. So give yourself that credit, trust that gut instinct. It's coming from some of the work you've already done in preparation.
Excellent. Yeah, if you could take a punch, learn a lesson, break even, or even lose a little bit of your money, and not lose investor money, it's a great way, for going forward, because yeah, there's going to be lots of punches thrown at you in this investing world. And it's the ones that could take a punch and learn lessons and move forward, keep moving forward, because there's different things that come up all the time. And it's you've got to find solutions. You've got to learn from those mistakes, that even guys that have been in the business 20, 30, 40 years, like new things come up. Even, guys that have done, a ridiculous amount of deals are hurting today because of interest rates longer and higher than anyone expected. So yeah, that's, you got to keep moving forward, and don't be afraid of making mistakes too, because we all make them. We all hopefully you learn from them.
Yeah, Gary, you said something really valuable there, and it may sound like just a line, but the key in all of that is to learn from it. Like truly learn. What is the lesson? What adjustments do you need to make in your process, your philosophy, your values? Take the lesson. That's the key. Otherwise, you're just going to be angry and spiteful, but take the lesson. That's what's going to make you a better investor. And quite frankly, when I'm looking to vet partners or anyone I'm going to work with, I want to know, hey, when did you get punched and what lesson did you take from that punch? That's going to give me so much more information than you telling me all the wins you have in your track record.
Yeah. Yeah. That's definitely when we talk about red flags with for new investors, is ask an operator, have they taken a punch, or what were their struggles, and if they don't have any, they haven't been doing it long enough, or they're lying. One or the other.
Yeah.
So one last question I have for you. I know, being a marketing executive, you talk about brand, and so how are you able to build your personal brand? What are the things that worked or maybe didn't work, and to get to where you are today?
Well, the good thing is, I think first of all, people misunderstand branding. Branding and marketing are not the same, even though they're similar. Okay, marketing is going to be, any advertising efforts you do, any PR type things you do, podcasting, all this stuff, right? Those are your marketing efforts. The brand is simply what people take away. The brand is just an amplification of who you are. So it's a megaphone to the ethos of, who John Casmon is, who Casmon Capital is, who Best in Class, the book and Break a Day Capital. Like, that's the brand. The brand is whatever you think it is. If I say Break a Day Capital, I'm like, oh yeah, they're really good at asset management. Well, that's the brand you've created. Now, yes, you've had some messaging and you've talked about it and you've done some things to push people in that direction, but that's the brand. The brand is what I associate with that name, right? And that cannot be faked. That comes from being authentic. That comes from your conversation. That comes from your experiences. So the biggest thing for me is, when it comes to branding, be yourself. Take that megaphone and highlight the characteristics that you want people to know about. For me, I'm a father first and foremost. I'm a husband. I'm very active in my family. I coach my boys. I coach my youngest kid in football. Coach him in wrestling as well. I'm pretty active with the family. I try to make sure that what we do with our investors, we focus on downside protection first and foremost. We focus on cash flowing assets. We do like deals that appreciate. Everybody loves deals that appreciate, but we want to make sure the cash flow first and foremost. We are not out there doing high risk, high leverage deals. It doesn't mean that all of our deals are perfect or they won't have any issues. I'm just saying that that's the first layer that we've decided to eliminate as far as things we want to avoid. So as we're building our brand, these are just elements of it. So don't worry so much about the marketing, the color palette, the logo, the podcast name, all of that stuff. Really focus on who you are at your core and let people know about that. Because investors, they want to know, who the hell is John Casmon? Is this a guy I can trust? Am I going to be able to call this dude, or is he going to duck me? Right? I've had the same phone number for 22 years. Now, that may not feel like an important thing, but I try to be consistent and show up. I don't feel the need to change it, right? I've had this number so long, I've actually come back to an area where it actually makes sense. I went to school in Dayton. I'm in Cincinnati now, but I was in Chicago. I was all over in different places. And now I'm back home. So that's one of the things that I think is really important, is being accessible. being somebody that can be reliable, being somebody that you can trust. I got a text message from a buddy of mine late last night, like midnight, and he texted me this picture. And it's funny because he's also an investor. We were in the business together. He's an investor of mine, but he texted me this picture of this private equity guy that I was just talking to earlier in the week, and he's at his house. And he's just talking about a small world. Like he's like, dude, look who I'm sitting with. And I'm just cracking up laughing, right? But the point is, that's the brand, right? It's what people are going to say about you when you're not in the room. That's what a true brand is. If I could control the message, I could tell you all the great things about me. I could tell you how our deals have, 19% IRR, and I can make it sound great, right? But when I'm not there, when you say, hey, Gary, what do you think of John? That's the real brand, right? The real brand is what people say about you when you're not in the room to speak for yourself. That's what you really want to focus on, not so much the marketing and everything else.
Excellent advice. Great having you. Definitely, we went in some different directions than I thought we were going to go into, but really enjoyed having you on. Where can listeners find out more about you and your company?
Yeah, listen, you can check out Multifamily Insights. If you listen to this, I'm sure you like podcasts. So we've got our show as well. So check that out. And you can also go to our website, casmoncapital.com. We have a ton of free resources on the website, including 35 hacks to find the best markets and sub-markets for investing. So you can check that out at casmoncapital.com.
Awesome. Thanks, John. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.